Hello friends, welcome back. Today we are going to discuss about intangible assets. What are the intangible assets? Intangible assets are those assets which we cannot see and touch, like our goodwill, patent, copyrights. These are the intangible assets. These are the assets which we cannot see and we cannot touch, but that is a real asset that going to add a real value for the business in the long term. That is intangible assets. So let's start with a case. A tech company acquired another small competitor for 5 million in cash. This is an acquisition. But when that company looking for that small company books of account, they have only 3.8 million of identifiable asset, net identifiable assets. Still they paid 1.2 million premium. Why? Because that small company has a stellar reputation and secret energy that you cannot appear in the balance sheet. If you are selling a company which have a good brand reputation, good performance, definitely you have to pay. Suppose you want to acquire a company, one of your competitor, which have a good reputation, good synergy, you have to pay, most of the cases you have to pay their book value plus some premium. While you are accounting that premium, you are considering that premium as a goodwill. So in this acquisition, there are two cases are there. How this company will account this 1.2 million extra they paid, that is they paid for goodwill. And the second thing, how do they handle this 500,000 patent they acquired as a part of the deal. So two intangible assets are there in this acquisition. This 1.2 million they paid extra than the identifiable assets. And the second thing, again with this asset there is a 500,000 patent. This is also intangible assets. So in this today discussion, we are going to discuss, we are deep into how we are handling the intangible assets like goodwill, patent, copyright, and what is the accounting treatment for that, how you will treat that entries in the US GAAP, and also this is very relevant for CMA USA examination. So let's start. First thing, what are the intangible assets? Intangible assets are identifiable asset without a physical substance. There is no physical substance for the intangible asset. To be recognized, they must be separable or arise from contractual legal right. So to recognize intangible assets, they must be separable and or arise from the contractual or legal right. There is a golden rule in US GAAP. Internally developed intangible assets are generally expensed as research and development, while purchased intangible assets only capitalized. If you develop an intangible asset through a research and development expenses, as per US GAAP, it has to be expensed, not record as an intangible asset. But you purchased some intangible asset or you acquired a company while you have some goodwill, that you have to report and capitalize as intangible assets. Suppose you are developing an asset, internally you are developing an intangible asset, thus generally expensed as research and development in the US GAAP. While the intangible asset that you have purchased some intangible asset, that has to be capitalized. So this is the treatment for the internally developed intangible assets. In most of the cases, it is expensing as research and development. Again, there is a separate treatment for finite and infinite life. What is finite useful life? Finite useful life means we know what is the expected useful life for that intangible asset. Indefinite means we don't know how much or what is the expected lifetime for that intangible asset, that is indefinite. The useful example for finite intangible assets, patent, copyright, customer list, these are the finite intangible life. We don't know how much, what is the period for the intangible asset and how long we can use that intangible assets. Then indefinite, your trademark, your goodwill, that is indefinite useful life. Then the amortization, what is amortization? we already discussed about depreciation. Depreciation means the allocation of fixed asset cost is over useful life of period. So in the case of intangible asset, it's amortization. For the finite useful life, yes, we have to amortize the intangible assets, but in the case of asset which have a indefinite useful life, there is no amortization in this case. Then the impairment test. Impairment test means the testing of intangible asset book value plus its fair value, that is intangible assets. When it comes to finite useful life assets, triggering occur with when a triggering event, suppose there is a significant price change or is there any legal event happen, in that case only it is going for impairment test. For the indefinite or useful life asset, at least you have to do the impairment test annually. Then for the finite useful life, it is cost minus accumulated depreciation. When the indefinite useful life, it is we have to compare cost versus fair value. Then let's move to amortization. Amortization is similar to depreciation. It's systematic allocation of asset useful life over its systematic allocation of asset cost over its useful life. So how you are calculating the amortization? It is normally cost minus residual value divided by useful life. Suppose in a real case, if there is a useful life, suppose if one of patent have a legally valid for 20 years, but you are expecting that technology will be obsolete within 5 years, then you have to use the lowest one. Yeah, so you have to amortize it is for 5 years only. So here is an exam tip. If there is two periods are given, one is legal and one is suppose the technological obsolescence period. So you have to take the lowest one. Which one is the lowest? That you have to consider for the amortization calculation. Suppose you have an asset for 100,000 and you don't have any residual value. So what you have to do, you have to just divide this 100,000 with its useful life. So you have a legal for your intangible asset, you have a legal validity for 10 years, but you are assuming that this asset will technologically obsolete in next 5 years, then you have to apply only 5 when you are calculating amortization. So it will be 20,000 per year. This is your amortization value per year. Now let's move into impairment of intangible assets. What is impairment test? Impairment test means at the end of the year, you are comparing your intangible asset value with its expected or actual value and you are doing that impairment test. Suppose you are doing an impairment test for a finite lived intangible assets. So then you have a two-step approach. The first thing, you have to do a recoverability test, and second thing, you have to do a measurement. In the recoverability test, you have to compare the book value with the undiscounted future cash flow to the book carrying value. If the carrying value is higher than your undiscounted future cash flow, then you have to do the measurement, that is the second step. That means you have to compare the carrying value with the fair value, and that difference you have to apply as impairment loss. So I will show an example here. Suppose your carrying value is 100,000 and your undiscounted cash flow. So this is your recoverability test. So in this case, it seems that your undiscounted cash flow is higher than the carrying value. So in this case, there is no need for impairment. There is no second step in this. So in the second case, you see your carrying value is 100,000, then undiscounted future cash flow is 90,000, So, in this case you have to move to second stage, that is measurement. So, in this case you have to compare your carrying value with the fair value, and the difference will be the impairment loss. So, in the same case 100,000 your carrying value, there will be undiscounted cash flow 85,000. So, in this case you have to do impairment. So, you will do the measurement with the carrying value and fair value, and you have the difference will be the impairment loss. So, in this case it is also same, you have to do first thing you have to do the first step that you have to compare the carrying value with the undiscounted cash flow. If it is carrying values greater than undiscounted cash flow value, then you have to do the measurement with the fair value, the difference will be the final impairment loss. Again at the same time, if the undiscounted cash flow is higher than carrying value, then there is no need for impairment test, because you already, this is your first step you have to do in the impairment. You have to compare the carrying value with the undiscounted cash flow. So, this will apply, this two step will apply for the asset which have finite lifetime. So, when it's come to the asset which have indefinite lifetime, there is only one step approach. You have to compare your carrying value with the fair value. There is only a single approach. If there is a indefinite lived intangible assets, there is no need to do the first step, that is undiscounted cash flow comparing with the carrying value. Again another important thing, if you do an impairment in the as per US GAAP, then you cannot reverse the impairment for the future period. This is an important task, important point for the examination. If you do an impairment of an intangible assets, there is no option to reverse that impairment, or go, if some cases if the value goes back to previous amount, there is no option to reverse that impairment in the future period. Then let us move into goodwill. When it comes to US GAAP, the goodwill arises only a business combination. You cannot create goodwill internally. As per US GAAP, you cannot create a goodwill asset internally. Goodwill has to come through your business acquisition. If you paid during an acquisition, if you paid a value more than its your book value of the acquirer, then that difference will consider as a goodwill. Suppose you acquire one of your competitor, their book value of asset is 100,000 and you paid 120,000. So, this 20,000 will be reported as a goodwill. Goodwill arise only in the business acquisition or business combination, and you cannot create goodwill internally. So, this is the formula to calculate goodwill, your purchase price minus fair value of net intangible assets. So, that difference will be your goodwill. Then the goodwill impairment. The first thing, you have to compare the fair value with its carrying value, and if the fair value is greater than, if the fair value is less than carrying value, an impairment loss is recognized for the difference, but loss cannot exceed the total amount of goodwill allocated to that unit. So, for the impairment of goodwill, there is only a single step. You have to compare the fair value with the carrying value. If the fair value is less than carrying value, that means your book value is more than its fair value, then in this case you have to do the impairment. So, there are some tips for CMA USA exam. The first thing, research and development. The cost for internally developed patent like lab work, testing, all are expensed under US GAAP. Only the legal fees and registration costs to secure the patents are capitalized. If you paid something to as a legal fees or the registration fees that's to secure that patent, that's only capitalized. All other expense for internally developed patent like you do some lab work, you do some testing, that all has to be expensed. Then the other thing, the goodwill amortization. Normally the public company does not amortize the goodwill. For the exam, assume that the public company there is no amortization unless it is stated specifically. Then the third important point, for the most of the intangible asset, the residual value is assumed to be 0 unless the third party given a commitment to buy it at the end of its life. So let's look into some cases. AZ Pharma buy a patent for a new drug for 2 million. The legal life remaining is 15 years, but generic version is expected to be hit in the market in 8 years, making the patent worthless. So in this case, for the amortization treatment, you have to consider only the 8, because lower of this one, the lower of the legal life or the expected beneficial life. So you have to consider only the lower of legal life or expected beneficial life. So in this case, there will be a new version has to be hit in the market in 8 years. So you have to consider only 8 years as for the amortization calculation. That means shorter of legal or economic life. So let's move to second scenario. A company has software license with a carrying value of 100,000. Expected undiscounted future cash flow are 90,000. The current fair value is 75,000. So how you are going to impair these assets? The first thing, you have to do the recoverability test. That means you have to compare your expected undiscounted future cash flow with the carrying value. If the carrying value is higher than the undiscounted future cash flow, then you have to do the measurement with the carrying value with the fair value. So this is the second step, that is 100,000 minus 75,000, that is 25,000 as impairment loss. So let's move into multiple choice question. On January 1st, year 1, Titan Corp acquired a patent for 120,000. The patent has legal life for 20 years and expected useful life is 10 years. Titan uses straight-line amortization. On December 31st, year 2, Titan determines that the undiscounted future cash flow from patent are 70,000 and its fair value is 60,000. What is the impairment loss Titan should record? So in the year 2, the company identified that undiscounted future cash flow from the patent is 70,000 and the fair value is 60,000 only. So what you have to do first you have to calculate the book value of this asset for the year 2. So you acquired this asset for 120,000 and there is a useful life of 10 years and legal life of 20 years. So for the amortization calculation you have to take only 10 years. So 1 year depreciation will be 12,000, that means 120,000 divided by 10. So 12,000 will be your yearly amortization. So 2 years you already completed, year 1 and year 2. So this is for year 1 and year 2 another 12,000. So total depreciation 24,000, it's already completed. So your current asset book value will be 120 minus 24. It will be 96. 96 is your book value now, and first thing you have to do you have to compare this 96 or your book value with undiscounted future cash flow, that is 70,000. So, your book value is higher than undiscounted future cash flow. So, then you have to do amortization with the fair value, that means with 60,000. So, the amortization loss will be the difference between 96 and 60. So, that is 36. So, option B is the right answer here. So, you can see that calculation here. Your carrying value is 96 for the year 2, end of year 2. Then first thing you have to do the recoverability test, and then you have to do the measurement. So, let us move into question number 2. Which of the following statement regarding goodwill is correct under US GAAP? A goodwill should be amortized over its estimated useful life not to exceed 40 years. Second point, goodwill is tested for impairment only when the carrying value of reporting units exceed its fair value. Third point, internally generated goodwill should be capitalized if its value can be reliably measured. Option D, goodwill impairment losses can be reversed if the fair value of the reporting unit increased in subsequent period. The first option is wrong. Here you can see the second option is the right one. Goodwill is tested for impairment only when the carrying value of reporting unit exceed its fair value. Is there any cases the carrying value or the book value is exceeded its fair value, then you have to amortize or impair the goodwill. Then the option C, internally developed goodwill should be capitalized. No, you cannot capitalize the internally developed goodwill. Then the goodwill impairment loss can be reversed if you cannot, once you did the impairment, then you cannot reverse the impairment. So, you can see the option C is option B is the right answer here. So, this is about today's discussion. If you have any doubt or you need any clarification on any of these topics, please ask me on the comment section. Thank you for watching this video.